This video is a simple technical analysis guide for beginners. I'm going to show you how a professional would go ahead and actually put some technical analysis on a completely fresh chart. So if you're a beginner, you come to a chart, there's nothing on here whatsoever. I'm going to show you exactly step by step how I would go through and put some TA on here, put some levels, put some information that I would need to trade. So all of those different technical analysis indicators, I will put as timestamps in the description so you can get to each one. Other helpful videos that I reference in this one will be down there as well. So firstly, come to your trading screen. Now, most professional crypto trading screens are going to be very similar as long as you use an A1 exchange, something like Bybit, FTX, Binance, or something like that. I'm going to use Bybit for this one, but you can see Binance is very, very similar, right? The layout and everything is more or less the same. I'm going to leave some links down to trading platforms in the description if you don't have them yet. Bybit give a deposit bonus up to $4,000. FTX give a discount on trading fees. I think Binance also offer a bonus for new traders as well. So I'll leave those bonuses in the description. But when you have an account, you're obviously going to come to the advanced trading screen. So you're going to come up to the top, either trade the spot here or derivatives. It's obviously whatever market you want to trade. Then come down to the asset that you want to trade, and it's going to load this screen. The first thing we want to do, of course, is look at the chart, because this is where we're going to be placing our technical analysis. First thing you can see, it actually gives me candlesticks right here. So if I click on this up here, you can choose a line chart and whatever suits you. Now, I would always go for candlesticks. Candlesticks are going to give me a lot more information. So if we zoom in right here, what I can see is the candlesticks giving me kind of information on which session was either an up session or a down session. So if I zoom in, now I have other videos on candlestick charts that go through them specifically, but essentially what this is telling me is this candlestick green is obviously an upward move for that session, and then the red candlesticks are a downward move for that session. That's going to give me information later on when I put some TA on the chart, but definitely I would be using some candlesticks here. Now you can use bars. They actually give you the same information pretty much. They're just a bar rather than a candle. Hollow candles, exactly the same. Now this one right here, which is Heikin Ashi or Asher, this is a little bit different. The candles actually give you a range, which is some of the last time period and some of the new time period. And so the candles are a little bit different. If you see the colors right here, when I switch back to candles, it's a little bit different. So I explained that in a candlestick video, which I'll link below. However, I would say for most people, just using candlesticks right here is going to be the move, and definitely not a line or an area chart. After that, I'm going to put the trading volume on the chart, which gives me an idea of how the trade is moving. So I want to come to the indicators right here, which we're going to use a lot, and then just search for volume. So I'm going to click that onto the chart, and you can see that coming down here. I'm just going to make it a little bit smaller because you obviously don't need it to take up all of the screen. Now, what I can see is a ton of volume being traded around this move. Now, when you have huge moves, obviously that means there's going to be a lot of volume, otherwise it wouldn't move a lot. When the price moves a lot in terms of its nominal price movement, you usually get a spike in volume. Now, volume is good for me as a trader because it tells me what's happening. If there's a lot of volume, you get this big spike. And what I want to be seeing essentially is when we move up, if that is accompanied by general rises in volume, that means that the rise up is genuinely supported by quite strong trading. That is, in my mind, as saying, right, if the volume and the price is moving up, that means that we're in kind of a bull cycle for that trading session. Now, if the price is moving down accompanied by a lot of volume, again, that tells me that the down move is probably quite strong as well. And so when you come to trade, you obviously have these in your mind in terms of what way you want to play the market. The next thing I'm going to do is put some moving averages on the chart, which is going to give me a really great idea of where the price is now compared to just the general trend. So we're going to come up to indicators, which we're going to be using a lot, and then you can type in moving average. Now, there are some different moving averages that you can use. If you can see here, moving average on Bybit, this is simple moving average, meaning that it just takes the price of Bitcoin in this instance for each session and then has it as a moving average. So if you have a 10-period moving average, it will take the last 10 sessions and plot the price as a moving average of those 10 sessions. And then when the new session is here, the oldest session gets bumped off, and that's the average as it moves. Now, there are other ways that you can actually look at this. For example, the moving average exponential, or EMA. And this essentially gives more weighting to prices that are nearer the present rather than a long time ago. The reality is they're more or less the same, and for most people it's not really going to make too much of a difference. So I'm just going to put moving average on the chart, and then what I'll obviously do is change the color, because they always choose the absolute worst colors. So you need this to stand out, so you can obviously do that as you want. Really important for me is the length of the moving average. What I want to do with the moving average is give myself a couple of different readings. So you can give yourself a short reading, a medium, and a long reading. So for me, I usually choose a 20 period moving average as a kind of short-term moving average. That would be 20 trading sessions. In the stock market, that's a month. In crypto, it's obviously just 20 days. Then what I want to do is add another moving average in here. So if I just put moving average again, click that on the chart, obviously change the style. And what I'm going to want to do is in the input is probably put a longer moving average in here. Now, I often use 2 or 3, but let's say we're going to go for a long moving average in this example. 200 period moving average is definitely a longer term moving average. So I'm going to click that in here. Now you can see how they're very different, right? So obviously the shorter period moving average is going to track the price a lot more closely because it's tracking shorter term price movements. The 200 period has a lot more data. It tracks the price for over a longer period, and so is obviously going to move slower. Now, just very quickly, what I can see here is that the price and also the 20 period are both below the 200 week moving average. That's kind of bearish. It's obviously telling us we're in a down move. It's quite obvious here. But what I can do is use these moving averages as some trading levels. So during a kind of bear market and a period of selling, what you're going to see is the price is going to struggle to move above the 200 period moving average if you're in a kind of prolonged downturn. And we can see that happening here. So what you can see, I'm just going to draw this on the chart. You can see the price actually moved up to the 200 period moving average, and then it got rejected off of that. And that's a classic bear market, a classic downturn. So you can use these levels to obviously influence the way that you trade. Now what I'm going to do is put some really key levels onto the chart that will help me with my trading and predicting prices and where the price might go. And this is called support and resistance, or areas of value. Now this is a skill that is learned over time, and certainly not something that you can just go ahead straight away and start identifying. And so, I've learned this through, over a decade of trading, both professionally and for myself. So, it takes a while to kind of learn where these levels are and how to identify them. So I've got some specific free videos on that, which I'll link in the description. I also have a trading course that goes through this and puts 10 years of experience into a course. 200 videos here. You can see the trading section is vast, and we have private trading groups and chat groups as well on Discord that you can come in and obviously ask me questions. But I'll leave all of that in the description if you're interested. But what I really want to do is identify some key areas of where the trade is now, where the trade might go below, and where the trade might go above. And that's going to obviously help me with my trading. Now, what I mean by support and resistance is essentially identifying key areas on the chart where the price trades at. Now, what I can see down here right now is we're at 30,000, right? You can see the price here is basically 30,000. And we're seeing a lot of trade around this level. Now, that gives me a sense that this may be an area of support. It's support because we're moving down. 30,000 is a key price. It's a round number, 30K. So what I'm going to want to do is look back on the chart right now and see if this support has been support before, and it has. You can see the price moved off of it here. It kind of bounced off of it here. And even during a really awful sell-off, which was the China ban, it obviously bounced from this 30 level as well. Even down here, it bounced from this 30 level and kind of met a little bit of resistance up here as well. So this is obviously a key trading area for the chart. That tells me that 30K is a key level of support and resistance. So I'm going to go and add a trend line on here. This is just going to show me essentially an area that the price may consolidate around and obviously meet some support. And obviously that's pretty good if you're trading long. So you want to just click here and then have the whole trend line around this level. I'd probably move this a little bit thinner just so we can get a bit more accurate. But just for this example, you can see that this is a key area of support where the price bounces off. Now, support, as you can see, it's support because we're coming down and hoping to bounce off of this now. It can also turn into resistance. What I mean by that is when the price is coming down and moves up, you can see that the price moved up here, but kind of got rejected off of this level. Now, this is another key level, as you can see, because it trades once here, twice, 3 times, 4 times, it kind of mucks around here, 5 times it meets support here, and then around here it's kind of meeting a lot of resistance. So I would definitely have this area and this price level as a resistance line. That seems quite, quite a lot of times where the price has actually bounced off of this. Now, to the downside, there's not a lot of data, and this is difficult, but what we can see, the only period where it really moves and consolidates around here is probably a resistance level. So you have to draw that on the chart and try and give yourself that line. Now, there are many kind of intra support and resistance levels as well. These would be the big macro levels where I would say that you would want the price to go to. So we're at 30 now. And to move to the downside to the next support level would be 25,000. Again, a round number kind of makes sense. Up at this level, you can see a lot of trade that's at 40,000. So it just so happens that trade congregates around these kind of round numbers, and that's how humans trade. So you can see how the chart kind of comes alive at you. Now, how would I use this? Essentially, you go into a trade, whether you're long, betting on the price going up, or short betting on the price going down. These are key levels where you expect to kind of have the trade bounce off, and that is where you take your profits if you're a short-term trader, or if you're a long-term trader, you identify these areas as potential entries. So, for example, if you're a long-term investor, when the price was coming down here, you're essentially looking at 30 to pick some up. And if you still think the market is going to be bearish, then you're going to be putting in some limit orders around this level, 25, 26 as well. Now, if you're a short-term trader, what you're looking to do essentially is identify whether you're going to go long or short, and then enter orders here as well. So if we're consolidating around here, what you would do is maybe go short and try and take profits when we meet the next resistance. Or if you think we're actually going to break to the upside, then you're looking at other levels. Now, I would not try and trade along for this. It's too wide of a margin. The price move is just too large. So you're going to have to go back and look at other areas of support and resistance. And there's definitely a local area of support and resistance here. So that would be a level that I would trade at. And I'd put a line in here and say, if I'm going to go long, I'm going to go long and try and take my profits up here. So that's how support and resistance lines and trading levels and prices can really influence your trade. Now, there are many indicators that we can use when trading and using technical analysis, and they can help us. We shouldn't rely on them, but they can definitely help us make decisions. And I'm going to show you one here very quickly, which is the RSI. So we're going to type RSI. Now, this is Relative Strength Index. Now, this gives us a potential strength of a move. It can't predict the future, but it can tell us essentially how strong the move is in comparison to previous times, and this will help us trade a little bit. So what we can see here, and I'm just going to take the background off. Now, what we want to see with this relative strength index is it's going to tell us how strong the move is in terms of where the price has been in the past. So what traders usually do is, if the RSI is really, really kind of low, that's telling traders that we are potentially bottoming out. We are kind of really in a bearish move. Now, bearish moves can always keep on going. And actually, this is measuring the strength of a move and not the possible direction of a move. So you have to understand its limitations. But essentially, when the RSI is telling traders that really this is oversold, right? So a ton of traders come in, push the price down. You can see the RSI up here is telling us that the strength of the move is really, really high. And traders often think, okay, we're going to get a reversal. So people often use indicators as indicators of trend reversals or trend confirmations. And so the RSI is going to give us some indicators here. So you're going to look at the price up here, and you're going to see that we're in a downtrend. Obviously, we're in a kind of bear market as of making this video. So what you think in your head is the 200 moving average is going to be a resistance level, as I said earlier. And what you've seen is the price moved up to this level, and actually the RSI moved up. Now, during a bear market, what you're seeing is the price is about as high as it can get locally, and the RSI is really strong. Now, during a bear market, traders may trade this reversal and say, we've had a really good move, and we're looking for it to be sold off again. And so that's what they would trade. And you can see not just the price is telling you that you've had a good move up, but you want to look at a trading indicator like the RSI, and it's telling you this move may kind of be done. There isn't much more room on the RSI for it to go even more bullish than this. And so we may be in for a reversal. So what you're seeing here is the price telling you, actually, we may be in for a reversal. And then you're using an indicator to kind of confirm or deny what you suspect. And what you can see is we did get sold off, and the RSI is now moving, moved back down. And this, for a short-term trade, if you were going short the market, that's kind of your trade. You're done, right? Because you traded it from the high down into a support level. The RSI is saying we're now oversold. We may be starting to reverse to the middle or even to the upside. So that is how you would use the RSI in a very simple way. There are many other indicators as well, and I'll leave some free videos below if you want to learn more about them specifically. Check out my crypto trading course if you want really professional guides on that. I'll leave it linked in the description. But we have a public Discord server as well with a trading group. So come into there and ask some questions as well. Also, Bybit and Binance and FTX deposit bonuses and trading fee discounts all down in the description. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.